We're going to get started in just a couple seconds, and we're going to give people a little chance to log in. We are at 150 attendees and rolling. So you should be able to hear me. You should be looking at a screen that says Real Expert on it. And we're going to go ahead and get started in just a second, everybody. You're going to have an opportunity to chat along and ask some questions. They'll be moderated because we get a lot of questions during these. And Michelle will be pushing those questions forward to us also. So, all righty. Good morning, Eric Benson. Look at Deidre's in. Troy Ward's on. Zane Peterson. You were live. Thanks, Zane. Like that. All right. We're going to get started in about 30 seconds. We're approaching 170, and now we're approaching 175 attendees. All right, everybody. Thanks for joining us this morning, everybody. We're going to go ahead and get started in probably less than 30 seconds. 30 seconds. Very good. You should be able to hear me loud and clear. Once again, you'll be able to ask some questions along the way. Look at Tom Sutton, Marty Johnson, good morning. Sebastian, good morning. Svetlana, hello. Very good. All right, everybody. We're going to go ahead and get started. Hello and welcome to Real Expert. I'm Toby Shifsky. Today's topic is the commercial real estate crisis. What happens next? Our guest is none other than Mark Halsey. Mark Halsey is a real estate expert in the commercial industry. I'm going to go ahead and give you a little bit of an introduction for Mark Halsey. Mark Halsey has been is a managing broker. Was originally licensed in real estate in Chicago, Illinois, in 1983. He must have the absolute fountain of youth because, Mark, you're looking great. Thanks for being with us, Mark, today. I'd like to let you know that Mark was recruited by RE/MAX Results and founded RE/MAX Results, the commercial real estate group, in 2003. So running his own operation since 2003, Mark has led their commercial team to be one of the top performing commercial brokerage groups year after year in the Twin Cities metro area here in Minnesota, and a national production leader with RE/MAX Commercially. So licensed in Minnesota and Wisconsin, he's an accomplished public speaker, a CRE trainer, and often shares his knowledge with commercial and the investment world for RE/MAX and other organizations throughout the United States. Also, a distinguished presenter and instructor at Kaplan Real Estate Education. So, Mark, thank you for being with us today.
Oh, Toby, thanks for having me. It's so good to be back with Kaplan. So looking forward to a quick 30 minutes here and cover some commercial information.
Awesome. So everybody, there's Mark's information is on this page. I'm going to go ahead and bring him in the video. You can write this down now if you got any questions of Mark for after. I'll bring it up at the end again. So go ahead and take a screenshot and let's go ahead and start. Mark, once again, welcome to Real Expert.
Thanks, Toby. Good to be here.
All right. So, Mark, we have a pile of attendees. Attendees, just want to say thank you for coming today. If you've been to these before, you know these go very fast. Mark has a topic, and the topic is, commercial real estate, right? The crisis. Are we in a crisis or not? What's happening next? And here's the thing. For all you attendees, you're going to get opportunities. If you have questions, go ahead and chat them in the chat box on your screen. They are going to be moderated. We get a lot of questions. And so Michelle Auger, our producer, is taking all those questions, and she'll forward those up to us if there's a consensus of questions that come in. So feel free to ask your questions in the chat box. And then also, you're going to have an opportunity to connect with Mark afterwards, get his information. If you have any specific questions, he's more than willing to help you with your questions about kind of the crisis that we're in today. And so, as a matter of fact, Mark, I'm going to start because this topic, we could talk for hours, but We're going to go fast and we're going to march through it quick. Let me ask you, Mark, commercial real estate, is there really a crisis in commercial real estate today?
Yeah, it's a good way to put it, Toby. Even with your facial expression, is there really something going on here? And the answer is yes. And the answer is no. Okay. Because again, our commercial real estate world is just so big. It's so big from our various product categories, whether it be multifamily, industrial, retail, office, land. And it's so big geographically. So whether you're talking about West Coast, East Coast, the South, and then even as you get in within local real estate, there can be a huge difference between a central business district and suburbia. Okay, so there's a big spread out there and a lot of differences between each of these product categories.
Got it. All right. So, because we're going to dig into them, I know we're going to go into the product categories, but one of the things you just said is there's a geographic issue, and maybe we can even talk about what is the issue that's influenced. I think all of us have been impacted by COVID. I think we understand, that COVID is an influence in our lives, right? And how it's being managed. I myself, I office out of the home now. I don't go into an office. As a matter of fact, all of our staff is a remote worker now. And we don't have plans to go back anytime soon in some of our locations. And so I understand that, with commercial real estate, high impact with COVID, but you also explained to me that there's other things that affected commercial real estate in 2020.
Yeah, no doubt about it. And it depends, of course, where you're at, within the United States or where you're at around the world, because even around the world, this has a big bearing. There's a big difference between what's happening in Israel versus what's happening in Australia, what's happening in Canada versus the US. We're dealing with a pandemic. Many of our cities are also dealing with social unrest. Okay, we're kind of ground zero here in Minneapolis, St. Paul, because of what happened with the George Floyd situation. And so social unrest is a real factor. It's a big factor. And we just got done with an election cycle. And typically when we have an election cycle, many people will also be a little bit cautious. Some will sit on the sidelines and say, you know what, we need to wait and see what's going to happen. And there's been a lot of wait and see over these past 9, 10, 11 months. So that's kind of been the theme that's been going on across the board. And it impacts all product categories. I don't care if you're a buyer, you're a seller, or you're a lender, a small business, or government. Everyone is saying, we don't know what's going on. We don't know where this is going to go. And we're going to kind of put the pause button on here for just a moment. And, those folks who do what I do, I mean, we study the trends. We look at what we think things are going to go. We don't have a crystal ball, but we're starting to kind of see where things are starting to come together now. So we've got some ideas of where things are headed.
So I picked up a couple things of what you said there. And number one is cautious. There's a lot of unknown, right? I mean, social unrest was one thing. A lot of urban centers, a lot of people looking around saying, do I really want my business here? If it was at ground zero in social unrest, people looking and go, am I even going to rebuild my business? Do I want to be here? Do people want to live here? I think what we've seen in a lot of these areas is there isn't a big rush to go back to those areas. As a matter of fact, there's a little bit of an exodus happening from some of those social unrest areas. Are you seeing the same thing?
Yeah, there is. And again, we're definitely in a pause period. So what that means is that, whether it be employees not going back into the office, or whether it be that we're still dealing with, like our local market, we have a big trial coming up, right? So even that alone, knowing that, are we going to have this great upheaval coming here with the trial? So we are still dealing with some boarded up buildings. We're dealing with the rebuilding of some of the neighborhoods that have been demolished. And again, I know that this is very localized, so this isn't across the board all the way around the country. But we do have a good dozen urban centers out there across the United States that are still suffering from this. And we're seeing some rise in crime. And all of this has a direct impact on commercial real estate. I don't care if it's multifamily, office, retail, it doesn't make any difference. This has a direct impact on all commercial real estate.
Awesome. So this is kind of sets us up where we're at. It's not just COVID, the pandemic. There's social unrest. There's election year, right? So, and I think what we're getting to is there's this pause. There's this wait and see. There's this unwillingness to move forward until things become clear. And that's a part of what we're going to try to cover today, Mark. So here's what you're going to give these people by the end of the show is we're going to look into the crystal ball a little bit, and we're going to tell them, I think we're going to get to what's really important going forward and what you're going to need to know about commercial real estate going forward. Before we get to that, though, I want to go ahead and get our attendees to play along with us. We got 235 people in here, and I want to find out what you're doing I know we have some residential people. We have some commercial people that are like, oh, finally a commercial, topic for these webinars. And then we have other people who are are property managers or leasing agents. And so I'm going to go ahead and just put up a really quick poll for everybody. Get ready. You're going to get to play along. And I'm going to ask the question. And our poll number 1, all right, go ahead and click on which answer best represents you. I primarily work in commercial real estate, residential real estate, or property management. Go ahead and answer, everybody, as fast as you can so we can get to as much content as possible here today. Look at that. We're up over 100 people have already answered. We got 200 people in here. Keep going, everybody. Let's go. Quick, as fast as you can. Click on your answer. I'm going to go ahead and I'm going to end the poll in 5, 4, 3, 2, 1, 0. Ending the poll. I'm going to share the results. All right. So everybody, you can take a look at this. All right. So what do we have? We have 55% in residential. We have, what is that? What percent in commercial real estate? I've got 34% in commercial. Look at commercial real estate. How about you people showing up today? I love that. Property management, 10%. So excellent. All right, let's go ahead. I'm going to close out the poll. So we kind of know, Mark, if you could, we're going to need to kind of understand. We got a bit of all worlds here. We got some residential, we got some property management, and all of them are going to want a little piece of something out of this. Okay,
you bet.
So let's go ahead and dig in. And we did talk a little bit about geographic, right? And maybe we can talk a little bit about why that's important. And what are we talking about when we talk about geographic? Like, are we talking central business district? Are we talking, what are we talking when we talk geographic?
Well, we can take it to the big scale, right? The big picture. So we can talk about the difference in geographics between East Coast, Midwest, West Coast, the South, right? So we've got that aspect because what's going on in New York City is not the same thing that necessarily is going on in Phoenix, Arizona. And so we've got a huge difference here. And so that's why we have to be very, very careful about just making blanket statements about anything, whether it be the commercial real estate industry or multifamily. Okay, there could be a big difference between what's going on in Chicago multifamily in the urban center versus what might be going on in Elmhurst, Illinois, outside of Chicago. So obviously we know that we've got some situations where some people are saying, you know what, I've had enough of the urban centers. I'm out of here. I don't need to stay here. I don't need to drive to my office now. I can work differently. Maybe now is a perfect opportunity to say, I'm heading to Florida. I'm heading to Arizona. Give me the warm weather. I can work there. Some people have no
personal income tax. I go to Florida. I go to Texas. Everybody's seen Austin, Texas. Hello, Texas. Hello to our Minnesota weather for this week. I'm really sorry. That's a scary thing for people in Texas that they went through. We live with it. We're prepared for it here. I know you're not. So people in Texas, we feel for you. But movement around the country, geographic areas, super important right now.
Yeah, and it is because, again, when you have some markets, let's just look at California and Florida. Florida's been a very open market with the pandemic, open in the sense of not as many lockdowns and shutdowns and all of that. Then you've got California that has had major lockdowns. And so what's the impact on that with people's lives, businesses, balance sheets, profit and loss, or even how are banks dealing with those owners of those properties as that restaurant can't pay their rent or they can only pay partial rents, which is interesting, Toby, because again, as we were kind of thinking about this last year, what might be happening with inventory, many people were saying, hey, we expect inventory to increase in commercial real estate because we've got businesses failing, we've got bankruptcies up. But what's happening here is banks are saying, you know what, hold tight. We're not going to come in and foreclose like we did back at the Great Recession. We're going to work with people a little bit more. We need to be fair and reasonable in our approach. And so there's been many opportunistic and vulturistic investors saying, ooh, I can't wait. We've got some good stuff coming here. But it's kind of coming slow to market. We're still in many of our areas, we're still dealing with reduced inventory on commercial assets, similar to what they're seeing on the residential side.
Got it. Okay, so excellent point, way to frame this. So geographic, because I think we're going to come back at the end and understand, not only geographic as in the country, where's business moving to, where are people moving to? Because what we're going to find, I think, is it's still important. Wherever the people are is where the commercial is going to be. Is that right?
Yeah, and so, we hear about this idea that people are leaving the city and they're all fleeing the city. And, there's some truth to that. There certainly is some truth to that, where some people are saying, I don't want to be here right now. I'm not feeling safe, or I don't need to work downtown anymore. So therefore I can move to a remote area. The reality is that our urban centers are still power cores. They're power cores all the way around. And so I can tell you that from a market demand point of view, market demand is still very, very strong in urban cores. Now, let me temper that a little bit. I can have an asset for sale in downtown Minneapolis right now, a building that can be just a fantastic standalone, gorgeous office building that pre-pandemic, pre-social unrest, it would be gone. It's gone. Okay. And right now it's not gone. It's not gone because people are saying, I don't know what's going on. I don't know how safe it is right now. And so once again, we need to be careful, because you can have tremendous activity on one side and complete stagnation on the other side.
So let's talk about this. Maybe we'll go a little more localized for everybody. So there's people on here right now. I see people right now I know are in New York. I see people on here, I know are in San Francisco. And they have questions, right? I mean, like I'm looking at Zane here. I think Zane's from Minnesota. Zane, we're going to get to your question in a part of our discussion in a couple minutes. But where you work and what areas within your geographic are going to be affected, I think is important. And in fact, I have another poll question. Everybody's going to get to play along. We kind of want to understand where you're working right now, so we can tailor some of this conversation to it. So I'm going to go ahead and pull up another survey. Everybody get ready for this. It's going to be a quick one. And it's going to be a question about where you primarily work geographically. Are you down in the central business district in your city? Are you full in urban? Are you in the urban core, kind of that inner part of the but not full in on the central business district within an urban center? And then are you in a rig suburb, or are you in suburbia? Look at this. Suburbia is winning right now. Everybody but fired up. Let's see where we're at. Suburbia is winning with 70, 80, 72 people, 74 people saying suburbia right now. I'm going to share these results in a second. Suburbia is winning. Inner ring suburbs, I think we understand those are closer to that urban core. And then urban core is, at the center of the urban core would be your central business district, hardcore downtown. All right, I'm going to go ahead and I'm going to close this poll. 3, 2, 1, 0. Here we go. I'm going to share the results. Everybody take a look. Here's what we have on. We got the vast majority are in suburbia, 53%, inner ring, 23%, urban core, 17%, and then central business district, 6%. That's a pretty good spread. I guess I'm not surprised by these results, but it does give us an indication of where everybody's at. All right.
So, Toby, it's interesting. So as I look at that chart, and your chart was central business district, urban core, inner ring, suburbia, and it went just like this, right? Just like that. And right now, you could also take that same thing relative to market demand. There's a lot of market demand just right there. You darn near pinpointed it. So as you're out there, I'm a broker, right? I broker commercial investment assets, and we're seeing, boy, central business districts, we're in a tough position today. Even with great assets, we're in a tough position. But let's go to suburbia today with a strong location, good traffic counts, strong neighborhoods, right? And the demand there is still very, very good. All right. So it's very much in line with where people are living, where people are working, no different than before. And so until that central business district starts catching back up with people coming back to work, we're going to see this very dynamic environment.
Let's do this. Let's move right into, because the commercial real estate, there's asset classes, right? There's what we might call product categories. Yep. And not all product categories are reacting the same to these social unrest, COVID, election, that we've just gone through. I'd like to go by asset class and give everybody kind of a snapshot of what's happening and a little look into the crystal ball. Can we do that?
Yeah, let's do it.
All right. So let's go ahead. Here's what we're going to do, everybody. We're going to start with, let's start with multifamily residential, right? This is your apartment. This is your condo. This is your multifamily. Maybe you can describe what's happening in multifamily residential right now in general.
Yep. Let me try to rip through this because we don't have a lot of time. Yeah. And so once again, within multifamily, you've got trophy, you've got the big stuff, right? You've got the high rises, whether it be, the condos, whether it be apartments, and then you've got the small product categories. You've got class A, B, and C, older units, newer units.
Yeah.
And where have we seen some of the changes in our marketplace, Minneapolis, St. Paul, and we're somewhat, reflective of the country out there right now. We had a statistic that said we had multifamily sales reduced by 46% in 2020. 46%. Now you look at that and go, that can't even be true. And why do I say that? Because if you're out there and you want to go buy a 5-unit or a 10-unit or 20-unit building, good luck right now. You're going to have one heck of a time trying to go find that type of a product. So you're saying, well, how can you have a 46% reduction in multifamily sales, but you can't find the product? It's the trophy. Okay, it's the big stuff. The big stuff accounts for a lot of the trading going on in the marketplace. So similarly with even the crisis, when you looked at where's the crisis with landlords, much of the crisis with people not being able to pay rents, right? There was a class C. There were a lot of class C buildings or class C landlords were saying, I'm having a difficult time collecting my rents right now and making my mortgage payments. And so once again, we have a very big discrepancy between the different types of asset levels within multifamily. The bottom line is multifamily is strong. Okay, it's strong. We're seeing some trends now where rents are coming back across the country. In fact, some parts of the country are saying our typical 2 to 3% increase in rents are going to be 4 to 5% increases. So, you look at that and go, I don't understand. You've got urban cores, you've got some higher vacancies, but over here we can't find an apartment anymore. So it varies quite a lot within the sector, but a very, very strong sector with lots of market activity, lots of investment activity.
Got it. Excellent. Let's go on to the next one, because I think the next one's going to be a little different answer for you. What about, because everybody knows this, right? Me, I was in office space. I'm a work from home person. I may go back to some variation of office work from home. I may never go back to the office, right? So what about office?
Okay, so quickly with office, here's the deal. The headlines initially were office is dead. It's collapsed. We're all done with office. And of course, it's a bunch of baloney. That is not the case. All right. We need office. People want to work together collaboratively, but it's a changing environment. So the way people are going to work in an office environment is going to be different. You may have some hybrid models. You may have people that are going to be working 2 or 3 days from home, 2 or 3 days in the office. Maybe you won't have your own dedicated office. Maybe you'll be signing up and using an office for 2 or 3 days. Someone else is using it the other rest of the time. Statistically, we are at a global vacancy high with office right now. So across the board, we're at about 13% vacancy. So are we seeing some pain in the office sector? The answer is yes. Are we expecting this to be a complete collapse in the long run? And the answer is no. Do we know what the net fallout is going to be in office? We don't know for sure yet, but I think the thought leaders out there saying we might see a reduction 15, 20% overall in office use. But guys, we're not going to see every office building suddenly turn into an apartment building. That's not the case. We will find some adaptive reuse in the marketplace, but we're just going to see it's a very evolving sector within office right now.
So there's a lot of unknown, right? I mean, and so when there's unknown, you have people hitting the pause button. And that part.
So no doubt about it. I mean, who's going to be anxious necessarily to go out there and put their money into an office investment right now, right? You're going to be careful. If you're going to put your money there, in the long run it's going to be okay, but you need to mitigate your risk the very best you can. And you need to be careful with the pricing, like always, because we make our money on the buy, right? That's where the money's made. So that definitely is a sector where people are treating it with caution, and they should be.
Got it. Excellent. Let's go on. I know we're going to come up on the time here when we could go for hours, because retail is the next one, right? Amazon killed the retail store. Online killed the retail store. Social unrest, COVID, everything killed the retail. Tell me,
So, no doubt lockdown doesn't help retail. Lockdown hurts retail. It hurts retail a lot more than Amazon. So yes, Amazon accounts for some dip in retail sales, but to think that Amazon is taking away completely from the retail environment, that's not true. Social unrest, pandemic, and lockdowns have a huge impact on these retailers. What's going on? So what's going on here is that there is a reshaping of retail, and the reshaping looks more like many of the tenants are saying, I want less space. Okay. I don't need as much space as I had before. I want less space. And I'm not so willing to commit to a longer term. So rather than signing up for maybe a 10 or 15-year term on 20,000 square feet, can we work out something for 5,000 square feet for 5 years? And so there too, people are kind of tempering their enthusiasm. But listen, a physical presence is not going away. Any retailer understands they need to have an omni-channel approach. You need to make sure you're hitting and firing on all cylinders. And bricks and mortar is a critical cylinder that still is going to be there. Yeah, we are seeing some of the large retail centers, some of the old shopping malls that are tired, they're done. They do need some adaptive reuse. They do need to turn into more community-based health and wellness, some things like that.
Yeah, tell us about this. What do you think of those big spaces? We drive by them. I mean, up here in the northern climes, we got a lot of big malls, a lot of big enclosed malls with big anchor tenants. And what's going to happen with those big spaces? Because not everybody's going to need that, 200,000 square feet. You're looking for 5,000 square feet.
It's happening right now, Toby. I mean, it's happening right now. Those retailers, they see the writing on the wall. We're seeing more of those shopping centers saying, we're bringing in office users. We're bringing in residential users. Again, the key words here are adaptive reuse. Okay, so when you're seeing the tired centers, something has to happen with them. Community centers, adult care, daycare, health and wellness. Okay, more community-based, but then again, live, work, shop in a single area. And so it's not just going to your Sears store anymore, quite obviously, and then bouncing over to Macy's. Some of those days with those massive spaces, they are a thing of the past.
Got it. So retail changing, smaller footprint. And when I have a smaller footprint, how am I getting away with that? What am I doing with inventory? What am I doing? Is it really just about a presence, like you said, that omni-channel? I mean, maybe this leads into our next category. I don't know.
People know you still want to, there's many of us that still want to go in the store. We may want to see a product, an item. We may want to return an item. We may want to talk with somebody. Yeah. But the idea that we need to have the physical space to account for all of the inventory, not so much anymore. Okay, because many people, what are they doing? We're all online shopping, whether it be Pottery Barn or whatever, but then we want to go in the store. And maybe it's, again, that store is the place where it's being shipped to. I don't want it to come here. I want to come there quickly. I want to be picking it up. I want to make sure it's in good condition, or I want to return it. So the physical presence, bricks and mortar, is still a critical element of retail. It's not going away.
Got it. That brings us to, and we're going to move on quick here because we're almost out of time. I want to bring us to industrial. Because there are some segments we're going to find that are struggling. People are on pause. What's happening with industrial right now?
Industrial's hot as can be. It's the category right now. I mean, if I were ranking them, industrial's number one, multifamily number two, and then we've got our office, retail, land, et cetera. And so industrial is a hot category. I don't care if it's a smaller space, a flex space, a 6,000 square foot industrial condo, there's high demand for it, all the way up to the standalone 30, 40,000 square feet. Distribution, right? That's a big one. We need a place to distribute our products. It's not just Amazon. There's much more than just Amazon. Yes, Amazon accounts for huge grabs within the industrial space, but we've got REITs who are buying up and gobbling up mega portfolios right now. They're playing monopoly with industrial space. It's having an impact on our lease rates. We're watching lease rates go up, but people want warehouse. We've got smart entrepreneurs. We have another generation of innovators. And these are engineers. These are smart people. They can't work in their basement. They need to work in a legitimate place to have their showroom and their development areas. And so industrial is a fantastic category, both from investment all the way through to owner-occupant.
Awesome. Industrial strong. I love it. And it is. It's the world of the entrepreneur, it seems like right now, right? I mean,
right on. It is.
Absolutely.
These are our days. Yes.
Yeah. And the major players see it already. Those giant REITs, like you said, coming in and buying millions of square feet. People spend a lifetime compiling millions of square feet within a portfolio, and these REITs will come in. These are REITs, everybody. Those are those collective money pool, vehicles for purchasing big piles of real estate. They're coming in and purchasing millions of square feet at a time. Exactly.
That's right. Real estate investment trusts are absolutely aggressive in grabbing up industrial space. They've had a huge impact on our Minneapolis, St. Paul market, but this is going on across the United States.
Absolutely. All right. They got to build all this stuff somewhere. If I'm on the land side of the deal and I want to try to get ahead of this, what's happening with land right now?
Yeah, so land is a tough one. Land's a tricky one. It can be all over the map. All right. So, yeah, they're not making any more of it. But again, at the same time, builders are being cautious. Lenders are being cautious with their builders. We sell a lot of land, but whether it be an urban infill and we need to go, have 11 lots that a small builder is going to go develop. There's huge demand for this right now. Urban industrial, very high demand for land for those types of uses right now. They still are trying to build more multifamily. So there too. But when you start to get into outlying areas, outlying the outer edges suburbia, and they want to develop their industrial park, that's not always developing that quickly. Okay, so sometimes you can barely give that land away, whereas in some of our closer to the cities where you've got just a much stronger demand for some of the land. So again, residential building is not going away. Big demand for residential builders. And so the mega builders out there, the D.R. Hortons and Lennars and the Pulte's of the world, they've got to have the inventory. And this is continuing to grow across the country. We need more housing product out there.
I agree. Then last I saw, they expect a 23% increase in new construction for 2021 over 2020.
Right.
23%. So if you think your construction product costs have gone up last year, wait till this year. How about this last thing, because I know this is near and dear to your heart, investment, right? Yeah. I mean, investment. Tell us what's happening. Where would you go?
Real quickly, you guys, it's hot as can be. Now, granted, because we've had, some balance sheets and P&Ls that have taken a hit because of pandemic, because of the other circumstances, that can have a bearing upon our return on investment. That can have a bearing upon cap rates. So as you start getting into net lease investments, your Starbucks, your Walgreens, CVS, right? That's net lease investments. There's a huge demand still for net lease investments. That's the ultimate hands off, right? You get down to the tenants, toilets, and trash. That's our duplexes, apartment buildings, our residential housing. Great demand, still strong demand there. We've got such crazy interest rates that anybody who's been in this game for any length of time understands that with rates the way they are right now, you're crazy not trying to use that cheap money to build your portfolio. And it doesn't have to be a big portfolio, grabbing 2 or 3 small properties. So investment demand is strong, which is crazy because, again, you've got this great haves and the have-nots of the world right now. There's a big crevasse between the haves and have-nots. But what I can tell you is that there still is a lot of capital out there chasing the limited number of deals.
Got it. Investment. I tell you what, I got one more. You know what? I don't even have time for it. We are out of time. If you had to explain to people in a nutshell, if I'm going into commercial and I'm going to understand any one of these aspects, what is the single most important thing that you have got to be confident about and have to be sure about?
I'll tell you, it's simple, right? It's about quality. And when I say quality, what does that mean? Number one, first and foremost, is location. Okay. And I'm not being cliche here. I'm not being light about this. This is everything. With the quality, if you're putting your money somewhere, you're putting it into location because you're not going to lose on the good look. Yeah, you can buy stupid on a good location, but hopefully most of us as real estate professionals are much smarter than that. With good location comes good quality tenants. Quality tenants provide quality income. Okay, and it's all about the income. But if we don't have the location, we can't get the tenants. If we don't have the tenants, we don't have the income. And so if anything, we have to be super mindful of, is that good deal over there in that B or C or D grade location really such a good deal? We got to be still focusing on the quality locations for the long term.
Where are people going? Where is the building happening? Where is the business happening? It's location. And if you're smart and you know your market, you can get ahead of this, right? There are opportunities out there. You got to move quick, got to have good capital, got to work with the haves probably. Make sure you can secure that capital. Mark Halsey, this has been a fast and furious 30 minutes about commercial real estate. It's glad to know, I'm one for one happy to know that not all commercial real estate is in crisis. There are some, but they will figure it out, right? And when people start to come off the pause button and start to reinvest and start to figure out things are going to continue, especially if interest rates are low, is what I'm hearing right now.
Commercial real estate is not going away, right? I mean, come on. It's not going away. It's a mega sector, tremendous opportunity out there. We ride the wave. We watch the evolution, but there's great opportunity for all of us here.
Beautiful. Mark, thank you again for being with us today on Real Expert. Everybody, Until next time, we'll see you soon.
Thank you, Toby.